Hello again, everyone. This is Joe Henches with Beyond the Chart, and this is technical analysis of the stock market today. Today is Saturday, September 13th, 2014. We're going to take a look at the markets as we usually do, daily and weekly charts, and we're going to look at Goldman Sachs, First Solar, Las Vegas Sands, and MGM Resorts International. Okay, this is the Dow Industrials, and I'm sure you're wondering what are the little arrows that I've put on here. Okay, these arrows are the, this is the low, Thursday, Friday low of the week before options expiration week. Okay, so options expire, the standard options expire next Thursday, or next Friday, I'm sorry, the third Friday of the month. Okay, so here's the low on Friday. And this is what happened in August, in July, in June, in May, not so great, but did get a couple of days, April, March, February. January is the only one that's a little suspect, and it makes me wonder, are we like January in here because we're starting to break down and this is curving over? We're going to find out next couple of days. And then, you know, when we look at December, October, November, and September of last year. Okay, so September last year, we got several days of pop that actually happened on a Thursday. This was Friday the 13th, and then we got 3 days into Wednesday, and then that was it on that, on September. So, do we get at least 3 days worth of pop back up here, or not? That's what we'll be watching for. Okay, take a look at the indicators. Not a whole lot more to show in here. It does look like we're kind of double topped in here and breaking down, although it's only, the RSI is only at 48, so it's right in the middle. On a weekly basis, again, divergences abound. 2 out of 3 indicators are showing divergence. And we're getting a close in here that's below, let's see, it closed 16,987. Yes, okay, so just like all 3 of the major indices closed lowest close of the last 4 Fridays. Okay, so it closed below the low of the last 3 Fridays. So little negative on that from that perspective. S&P 500, you know, closing back 2 out of 4 days here now, down below the 10. A lot of the trading is almost below the 10 in here. Almost looks like divergence between here and here, but I really, the best divergences to me are when bars are like around 12 or so bars apart. That's the ones I seem to find the best divergence situations. Let's look at the S&P weekly, like in here on a weekly basis. This looks like this is better divergence. And 2 out of 2. I don't have demand because I don't have volume on the S&P 500. This is showing divergence. Very clustered low days in here. And you can see, you know, the way the weekly bar closed. And let's take a look at the New York Composite. The New York Composite, and look at the range. The high and low of the last 4 days has all been below the 10-day. Okay, not only is it closing below the 10-day, but the entire trading is looking below the 10-day. So that's looking negative. So it's, I don't know, it's going to be interesting to see. Maybe this is all we're going to get out of the little 5th wave. Or, you know, it comes back up. I mean, we'll have to, you know, watch and see. I mean, you got to take it 1 day, 1 week at a time, just looking to see what the market gives you. New York Composite on a weekly basis, again, doing exactly like the Dow and the S&P, closing below the low of the last 3 Fridays. Okay. And yes, well, I mean, of course, this low was a little bit below this to begin with, so this is not really diverging, but it's amplifying the look anyway. And let's see, the Nasdaq, Nasdaq Composite. This looks like it's just going sideways. Now, this is a little less bearish than the look of, say, the New York Composite. Compare this look to the New York Composite. The way the New York Composite is slanting down. All 4 days of entire trading was below the 10, and the 10 is moving down. This is sideways. Okay, so we could get another push up in here, but this is definitely, this has gone the minimum that it needs to go. This could stop at any moment, any day, as far as I'm concerned. Nasdaq Weekly. And again, what you see, this almost looks like sideways, up, slight pullback sideways. This looks like 5 little waves to me on a weekly basis, a little clearer. And you're getting divergence that's showing up in here. 2 out of 3 indicators are giving you divergence. Starting to get a little pretty tight compressed trading of the last 3 weeks. And we go to the Russell 2000. And let's see, the Russell 2000, similar type thing, a little more choppy, not quite as bullish a scenario. Of course, we're not even close to being the highs like the Nasdaq is, and of course that's the way this has been. We've talked about this. Nothing new there. Let's take a look at the Russell on a weekly basis, if I can find it. I'm looking for RUT Weekly. It's probably right in front of my face. Well, okay, there it is. Okay, so Russell on a weekly basis almost looks more like it's in this sideways box in here. You know, at first we thought, well, maybe we're getting a head and shoulders top, maybe we're getting a double top. Well, then it didn't want to break down. So, I mean, a double top is not confirmed until you take out this middle right here. So you got to break below this low to confirm a double top. Okay, well, it hasn't done that yet. So what I like to do is once I get this peak, and once you get another pullback in here, you draw a line across and you watch to see, does it take out the higher low in here in the range, and it hasn't done that. Okay, so that's the indices. Let's take a look at the short-term trading index. If I can find it, here we go. Short-term trading index, the 10-day exponential is pulling back, and the blue line is at 0.92. I'm looking at another data window over here to the right that you don't see. 0.92, the close today was 0.76 for Friday. So it's starting to pull back. I mean, we get 3 days of upward movement, and we could get that 10-day down in the extreme reading area. So we got to watch for that. CBOE market volatility index. This pushed on Friday, and we got a higher close, second highest close of the last several weeks. So, and we're getting the 10 rising and breaking above that 21. Will be interesting to see. We could get a couple sideways days, and then who knows. Okay, high-low index. That's also showing interesting. We're breaking down below where the new lows are now exceeding new highs for the day. And this is the first time we've had this lower reading. There's only been 6 days in here, and 5 days, it could be the other way around, 6 days here, 5 days here, that were lower readings than this all year, okay? And this is the first time of the year. This is 1, 2, not counting that one, 3, 4, fourth break below where now new lows are exceeding new highs. So we got to watch this, and especially since the 10 is broken below the 21, that's a signal that the short-term trend on this has turned down, and it could start to trend down that way, and especially since it's broken below 0. So that's, you got to say, okay, now you got to put yourself on alert because of that kind of activity of what's going on in the market. All right. Oh, and the CBOE equity put to call ratio is at 0.61. So it's not at an extreme. It's not down in the low 0.5s yet. So not getting extreme reading on that. I don't have that in a chart, but I just wanted to pass that on. All right, let's take a look at the Ishares high yield, which is where I got my indicator. All right, so this continues to sell off dramatically, and we've got the 10 crossing below. The 55 is down, the 21 is down. All 3 of these are down. It's trading below the 233-day. So we got a pretty hard bounce, or pretty hard thrust down and a bounce, and now we seem to be resuming. We either are testing this, or it's going to take it out. Let's take a look at it on a weekly basis. You know, and so why is this important? Okay, the high yield bond fund. When the high yield bond fund, when people are going after this, that means it's risk on. People are willing to take the risk of buying high yield bonds. Well, when it peaks and it doesn't confirm, like what the market keeps going higher and the high yield, that tells you that people are starting to do risk off, and it's a signal that people are getting more cautious, and that it could be a turn coming in the market. So that's what we're watching for, and we'll see. This is on a weekly basis, so you can see a couple weeks down on this thing. And you know, I've said this before, where the market, you know, the market moved to new highs, but this did not. Okay, the next one is the home builders. Spider home builders, there we go. Home builders, pretty big down day on Friday. You know, you start to, you know, try to get some bullish action on Wednesday, Thursday, and then Friday it said nope, no. And here's what I noticed: the 10-day is crossing below the 21. Okay, and the first time it's done that since back here, and then we had a pretty good sell-off, and back here in March, and then we got a pretty good swing to the downside. So there's been 3 other times, January, March, and early July, that happened, and now it's happening again. So that's a signal that this is wanting to head down. If we look at the on a weekly basis, you can see it's not so dramatic in here, but it's trending, you know, lower lows and lower highs. So that's the look of the home builders, and that's the weakest of the 3 that I watched. Let's take a look at the semiconductors. Okay, market vectors, semiconductors. This has been fairly strong. It kept pushing to the high side, but you can see here this is the lowest close of the last couple of weeks. We'll have to look at it on a weekly basis in a minute. Looks like we're getting divergence, but that's over a pretty broad time frame. I'd rather see a closer divergence time frame than that. And the demand index has gone negative, so that's not a great sign. And you can see the volume. Did you see that bar here? I mean, look at the volume on this, on the semiconductors. It's like they're saying, okay, get me out. And it had a pretty good down day. If we take a look at the weekly, XHB weekly. Oh, that's not, wrong one. Sorry about that. SMH weekly. So this is where the divergence is really showing up a little clearer on these bars, okay? In here and in here. So all 3 indicators are giving you a very strong picture that the semiconductor party looks like it's over with. And then we got to close below the low of the last 2 weeks, and that's a reversal bar, engulfing reversal bar, outside down day, and that's a bar for a week. Okay, so that's pretty negative looking week, pretty negative looking reversal bar in here. Okay, the next one we're going to take a look at, the last one, is the XLF. So where is the select? There we go. That's the daily. And this one has been the best. Well, this is very similar to the semiconductors, is that it's continued to push. You see these little, you know, higher rallies. Although now we're getting, see how the indicators flattened out on this move, flattened out. It doesn't really show as too negative in here. And again, we didn't get any reversal bar, nothing closing below. Let's take a look at a weekly chart on the financial index. You know, if this thing rolls over like the others, now this is this channel it's been in, this upward trending channel, just bouncing back and forth, and we are getting divergence on this last move on a weekly basis. Getting it on the RSI. We're not getting it here, which I thought is interesting. And this break of this trend line is, you know, it's got me puzzled. I'm not sure what to make of that. Okay, but in here, we're definitely getting divergence on the demand index. So 2 out of 3 is saying, watch out. This move might not be trustworthy. You know, you need to be careful if you're in the financials. Okay, so that's it on the markets. Let's take, it's been 15 minutes. Let's try to get through Goldman Sachs, First Solar, Las Vegas Sands, and MGM. So let me start off. Let's start off with Goldman Sachs. All right, Goldman Sachs. I think we're in a fifth intermediate move, wave move. This was a pretty nice, clear A, B, C pullback in here. And this is my best assessment. I've tweaked this a little bit since the last time I reviewed it. I do think we have 1, 2, nice strong 3, 4, and we are in a fifth minor wave, okay? And I think we could be very close to, we may have already, this could be the peak right in here, but this is previous peak resistance from 2009 and 2010, okay? That's where this dotted line's coming from. And the other thing is we're starting to get some resistance on this fifth wave move, which is, or divergence, which is what you expect on a fifth move, okay, the fifth wave. Typically see it. So I think, you know, I'm going to be watching for reversal here on Goldman Sachs. First Solar, on the other hand. First Solar is in this, you know, large topping action in here. And I don't really have any specific wave count on this. This has been doing some kind of wavy, what I call overlapping waves. This is almost a 3, you know, I don't know. You can't really say that's a clear 3. You know, that's a nice, that's a beautiful flag right in there. But right now, this is you know, just some kind of, you know, topping consolidation activity going on. Now, the only thing I'll point out, let me take a look at the indicators real quick. Oh, I'm going to come back to that in a minute. I'm not seeing anything there. Yeah, we got this nice trend line in here, so you need to be careful. If we swing down and break this, that could be a signal that this then wants to head to at least the bottom of the box, if not more than that. All right, the other thing I was going to point out that I saw on here is that the ADX, okay, average directional movement indicator, which is usually a sign of trending. Okay, number one, it's not been doing anything since this point. Okay, it's been trending down, and it's right in here. It hit 10. It's actually at 11 right now. But there's only, the last time it hit 10, I made a note in here, it was 3 days, August 28th to September 2nd of 2008 was the last time it was as low as 10. And after that, it then dropped 66% in 11 weeks. Now, granted, that was in the midst of that huge financial panic and crisis that was going on. I'm not saying First Solar is getting ready to drop 66% in 11 weeks, but I'm just saying that when you get an ADX that is that low, you have to be, again, be on alert for some kind of move. Sometimes it's a signal that there's a big move coming. All right, let's take a look at Las Vegas Sands. Las Vegas Sands, as I mentioned once before, I am on reversal alert in here. I'm watching for this thing to turn to the upside. It hasn't done it. I would have liked to have seen it break this low in here. But we are getting, we're not getting divergence, but we've got this nice trend line that, you know, from here to here. If it breaks this, and it got a nice little fish hook action on the RSI on Friday. So I'm going to watch for this thing on Monday to pop. It'd be nice to see that. The only thing is we're just not getting, the only demand index is the only place where we got bullish divergence showing up in here. You know, it's got this nice trend line too. Okay, so that's, we'll see. But we're on reversal watch for Las Vegas Sands. And MGM Resorts International. Okay, the best thing I could tell you about this is that, you know, I'm not getting divergence in here either, but the best thing is it looks like it's an ABC reaction. See what I'm saying about I'm not getting divergence? you know, there's no bullish divergence showing up on the demand, and here the DI minus went higher, so I'm not getting it, and so therefore it's trending down. Now I think we've got an A, B, C move going on, and the reason I've got C down here is that a lot of times if this is a zigzag, then what I'm looking for is for C to equal A at a minimum, and sometimes it becomes a lot longer than A. But if you measure out A, go back to the beginning of B, or the end of B, which is the beginning of C. Okay, here, right here is where C equals A, and where is that? That's 21.37. Okay, so if this is an ABC like this, and it sure looks like it, smells like it, acting like it, you know, with this overlapping waves and the way this is trending back down, this would be my first target right in here. So this still may have some more to go, and we're just going to have to watch to see if it does, because we're not getting any bullish divergence. And I don't know why this would be weaker than Las Vegas Sands and or Melco Crown Entertainment, but it looks like it might be. So anyway, that's it for today. This is the 4 stocks. I will be back tomorrow with the trade ideas, update on the ones we've got, the 3 that we're in, and look to see if there's any others. I haven't looked at the rest of the stocks yet. Look at those today. This has been Joe for Beyond the Chart. If you felt like this video was helpful, please share it on social media. If you're not a subscriber, subscribe. You get access to the Trade Ideas webpage, and download my PDF, and you get email updates of new posts. So anyway, everyone have a great weekend. We will talk to you again tomorrow.